You gonna hit me with it?
Today, Junior.
Ooh.
Back to school.
What we could write some cursive, risotto.
I don't think people write cursive anymore, do they?
This is wild. So I know we're a little bit different in age group, but not that much.
No.
So my son started kindergarten today. He will be bringing home a Chromebook.
Wow.
And then it is our responsibility. Well, I mean, technically his responsibility, but he's 5.
It's going to become your responsibility.
Yeah, exactly. My responsibility to make sure that every day it goes back to school fully charged, because they only have one extra charger in the classroom. So you wonder why Indiana has like lower real estate taxes. It's because they don't buy a bunch of extra chargers for these Chromebooks.
Makes sense.
Yeah, this is it's a lot of pressure. But yeah, kindergartners now going to have Chromebooks. So cursive by the wayside.
Yep.
Actually being able to write might be by the wayside at some point here too.
ChatGPT.
That's where it all lives. It's a real thing. It's a scary thing, but such is life.
That's what they're going to learn nowadays, huh?
Yeah.
We're the old guys that learned cursive and wrote paragraphs.
Read books like paper books, and like now like these guys are like doing reading classes on like online and all of this. Now the interesting part, so there's not going to be snow days. So when they have a weather situation, not that I think it stopped snowing here in the Midwest maybe 2 years ago, 3 years ago,
and a couple good winters.
Yeah, my dad's normal fear would be, we'll buy a snowmobile growing up and then it'll never snow again. And how about let's just buy a real big snowblower and then it'll never snow again. Yep. So if there's a snow day though, they will have like a Google Meet class. So it keeps the school season or a school schedule condensed.
Yeah, you don't have to add the days on that you missed and stuff like
that.
Yeah,
you're not burning good summer days.
How are you policing kids, kindergartens making sure they're getting on a Chromebook? And
that is a damn good question.
I guess that's what they did during COVID. So but I don't think they policed it very well.
Yeah, I don't think so either. Maybe they've worked some things out. State of Indiana, interestingly, for those people maybe considering, jumping across the border for different education styles and whatnot, just implemented a brand new reading curriculum for elementary school kids.
Oh yeah.
I was told it's going to be very difficult. Okay. And they also Lake Central, which is St. John and Dyer and that area, also implemented a truancy policy. So there's I'm not kidding, Nick, there was a handbook, like all these things about if your kid's absent, like what's an excused absence, what's unexcused absence. So they're cracking down over here.
Oh, that's good.
Maybe the old jokes about the guys over in Indiana don't know what they're doing. They've raised the curriculum bar quite a bit over there.
It's changing.
Yeah,
that's a good thing.
Things that you don't necessarily know about until you're now completely involved in it.
Yep. Which is you.
Yeah, that's not dropped, but I had to walk my son to the bus stop for first day of kindergarten today. So
there you go.
That one's not in the dad playbook. Yeah, but back to school stuff, right?
Mm-hmm.
We'll make it a little back to school, and I know we've got a lot of technical stuff here on our show and conversations, but let's maybe just talk about some ABCs.
We'll dumb it down. We'll start with the ABCs. ABCs of real estate, huh?
Yeah, how about that?
Okay.
Sound fair?
Easy enough. No cursive, nothing crazy. We can put it on the screen, right?
Well, we can try to share it. Well, we're going to start with the A.
Okay.
Apples.
Yep.
I don't know what else. Oh, how about appraisal?
Appraisal.
So that's I think we get this question a lot, right? In transactions, what is the appraisal? When is it done? Who does it? All of that stuff. So a finance transaction with the mortgage, the mortgage company is going to order the appraisal. It's an independent third party who runs through a bunch of sales comparables and goes, I think that the property is worth this.
Yep.
I think it's the kind of a goofy process. It should be more of a pass fail, not a specific number, but it is what it is. Who we measuring on GPA there.
Yep.
You in your guys' situations too, like sometimes in cash offers, right? The seller or buyer could still probably get an appraisal if they wanted to.
If they wanted, yep.
I know you've asked me about some appraisal stuff recently, so you maybe have a couple estate type situations going on with those. What else? Where else would you need an appraisal outside of a standard mortgage transaction?
Just in general, I guess if you're dealing with situation, maybe an estate, right? You got siblings fighting over what a price may be. The best thing is to hire a licensed appraiser to go out there and tell you what they think the value's worth. You got a divorce situation, it might be best to have an appraiser go in there and tell you what they think the value's worth. That way there is no fighting it. But I think the important thing to remember, and each appraisal is different, right? They got FHA appraisals.
Yep.
Conventional appraisals. FHA appraisals are a little bit more. What's the big difference between FHA and conventionals? I try to tell people there's not a huge difference, although there is smaller differences.
Yeah.
But
So now they're nearly the same.
Yep.
So the biggest parts, like from a property condition situation on an FHA appraisal versus conventional, is if the property is built before whatever was it, the lead basement cut off 1978. 78. Yep. If there's deteriorating or failed paint on the exterior or the interior, and the house is built before 1978, on an FHA appraisal, the appraiser is required to indicate that the appraisal will be subject to the remedy of that. Mm-hmm. The loose handrails and other like safety concerns are now flowing into the conventional side of things, but that's probably the biggest one there. On a very, very technical side, yep. When that FHA appraisal is done, it's logged into a system that any other FHA lender could, if whatever the buyer wanted to move lenders or the buyer backed out, but there was already another appraisal done with a different buyer on that property, it will hang with that property.
Yeah, for about 6 months?
Yep.
Yep.
So that's a big difference there. How about amortization? That's good luck spelling that one.
Nowadays, right?
Yeah.
GPT.
Yeah, exactly. Amortization. So mortgage. We'll shout out to local real estate attorney Pat Carey on this one, because he'll love it. If you're ever one of having him represent you as a buyer, he'll tell you mortgage Latin is death pledge. So that's the document that you're signing. So amortization is like technically in Latin is to kill off, but in the real world, it's when you're making that payment, that mortgage payment, you have principal and interest. So the principal reduces the amount you owe, right? Mm-hmm. So that's what amortization is paying off the principal.
Okay.
And then Adam's not on this one right now. He might hop in a minute, but annual premium, homeowners insurance. So usually spoken about or quoted in what your annual cost for homeowners insurance is.
Yep.
And I think there's in the contracts, right? Like there's some caveats too about like being able to secure homeowners insurance on a property, right? And some other.
Yep. You got to be able to secure home insurance.
We've had we've talked about this. Some property condition situations recently where borrowers have not been able to actually get replacement cost coverage on a property, or buyers, and that you can't get a mortgage.
Yep.
So again, learning about annual premiums, right? Any other A's? Do we miss an A?
I think we got all the A's there that I can think of in the.
All right. How about B's?
B's.
Buyers agent.
Buyers agents. Oh, okay.
Look at that.
Man. Woo. Buyers.
But what do you guys say about buyers agents?
Buyers, well, hey, we work buyers and sellers, so I consider myself a buyer's agent as well. I mean, that's the agent that you're hiring to basically show you homes, walk you through homes, give advice of what they think, and negotiate, offers, write contracts up for you, and just be that person that connects you with the lenders, and just make sure everything goes smoothly for you buying a home, whether it's first time buyer, you're buying cash, or downsizing, upsizing, whatever it may be.
The old quarterback of the operation.
Quarterback, there you go. Quarterback, captain, whatever you want to call it, of the entire ship.
All right. So that's buyer's agent, right? Yep. So they're representing a buyer in any situation.
Yep.
You have certain duties and expectations with that too, right? Like you're working for the buyer, you're representing their interests at all times.
Yep.
All right. So we got bridge loans. We've talked about these a lot. Bridge loan, a situation there, another B word, where you could leverage equity in your current house to make down payment or cover down payment and closing costs on next house, and then sell the house that you vacated later on.
Yep.
It's a solid product. I think like right now, at least we're seeing a lot of goofy things on these contingent offers lately.
Yes.
For a million and one reasons. So I think being able to, as a buyer's agent, a situation might be, this could be the right tool to get you into a well-priced or highly desirable property, so that you don't have a sale contingency.
Yep.
All right.
Yep. That can help you win that's an important thing. It helps us win many real estate, deals and transactions. If a buyer really wants a property, but they got to sell a home and they're competing against someone that doesn't have to, that's a big thing. Having that contingency is a big thing. Price is obviously the number one thing people look at, but having to sell another home that adds a whole other element where sometimes someone might take something less. So
And
I think we've done a few bridge loans for people.
We have,
and that they've helped them secure their deal. We sold their home, and everybody's happy.
So I got a question, because this actually has come up recently with some people and thoughts and other things. So if you're selling a house, right, and you accept a buyer's offer that's contingent on sale, a lot of times there's this thing like a kick-out clause or something. And this, like, in my opinion, on the mortgage side, like, we could always say, if you're that worried about writing an offer like that, you could always write it contingent, and then we can have the bridge loan in the background. And because what happens, right? So if you have a contingent on sale accepted offer, and then the seller gets another offer, right, they have to notify somebody.
Yeah. So if we have a contingent on sale offer, and I'm the buyer's agent in this scenario, right? So we have a contingent on sale. So they're buying a home, and my buyers are contingent on selling their home. We get under contract with them, but there's a clause in the contract, and it's up to negotiation, but typically it's about 48 hours, right? 48 hours because the seller can continue to market the property while that contingency is still active, while they're still trying to get their home under contract. If they get someone else to come in there and put an offer in, they can take that offer. However, typically it's up to negotiate. I've seen some 24 hours, 72 hours, but typically 48 hours. Let's just go, the norm. You got 40, that my buyer would have 48 hours to decide whether they are going to take off that contingency, that caveat of having to sell their home in order to buy, or if they want to keep that on. So,
yeah. So sometimes
you got time. If you're in that scenario, right, you got time to make a decision. It's not like I'm calling you up and say, hey, they got an offer. What are you thinking? Usually you got 48 hours to kind of make that decision. Call Tony, whoever your lender is at the time, and discuss the option of could we do a bridge loan in order to, keep this deal alive.
And I think that's one thing to consider too when we're going through the sales process or the getting ready to buy process. We can get you pre-approved at no cost, no obligation for that bridge loan, and that way you don't have to use it. But if you get that unfortunate call that, hey, we got another offer here, do you want to waive the contingency, yes or no? And maybe you're just not in the right spot, or whatever. Something hasn't happened where you haven't been able to secure a buyer for your property you're trying to sell. Well, we just hit that button and deploy it. You waive the contingency and you keep the contract and you buy the house. It's
good to have options in any market. You want to strengthen your position as a buyer, seller, whatever your situation is. In this case, we're talking buyers, right? So you want to strengthen your position. A weaker buyer, I should say, is having a sales contingency. Not that they're necessarily a weak buyer, but it could be weaker compared to someone who doesn't have that.
Because now you're relying on some other transaction,
a whole other transaction that the listing agent isn't a part of. So as a listing agent, I can speak for myself. I get nervous about that because I got no idea, what's going on. I mean, we can ask and call and ask, but they're never going to tell us doomsday scenarios and stuff like that. They want to get the deal done, right? So and they work for their buyer.
How many times you hit the domino rally thing and that last domino didn't fall the right way,
something happens, yeah. But we had one where someone didn't show up to a closing. Next thing you know, 4 closings wiped out. But
so there we go.
Yeah.
There we go. So chains of closing, but
okay, here you go.
Closing costs.
Mm-hmm. Huge.
A very murky term. Unfortunately, It seems like it would be a very clear-cut term.
Yep.
But I think it's murky, right? Because you have, in a transaction, you're going to have, if you're selling, you're going to have real estate commission in there.
Yep.
Title. If you're in Illinois, you're going to have some variation of transfer tax.
Yep.
Again, Illinois, you probably have attorney fee.
Yep.
So when you are selling a property for $400,000, if you don't have a mortgage on it, you're likely not walking away from the table with $400,000.
Well, 100%. Yep.
Even if you're doing it for sale by owner.
Even if, yep.
There's cost and the allocation of cost typically written into contracts.
Yep.
Illinois has got a lot of default positions in their contract. Indiana, right? You check boxes on what party's paying for owner's title, which one's paying for lender's title.
Yep.
Other closing costs, right? From a buyer's perspective, you guys can help a buyer negotiate for the seller to cover some of their loan costs or some of their transaction costs, right?
Potential, if you're worried about it. So, I mean, I think it's important, and I think a lot of buyers know all this stuff, and we educate them on them well. And I always refer to you on this to the buyers, and we always, that way they know what they're getting into. Is that buyers, I think they get confused. Okay, they're worried about down payment, right? Yes, you got a down payment. You also have closing costs. The biggest question is, what are those? Talk with Tony. Tony know you can run your rate through. Because the lending stuff and all that kind of stuff to understand what that is. So you're gonna have your down payment. everybody's like, okay, I got this much to put down. Okay, but you also got closing costs. So maybe we got to negotiate the seller to cover some of that closing costs, all of that closing costs, whatever it might be. It's not cut and dry. The seller doesn't have to agree to it, but learning and understanding that, so that way you could put a stronger offer in rather than finding a home and then just finding out about closing costs along with your down payment.
Yeah,
strengthens your offer as well.
I think we see that a lot. Is like there's a lot of confusion about that part, which is why if you're in our ecosystem as a buyer, you're going to hear the term all-in dollars.
Yes.
Versus trying to segment down payment and closing costs, because it gets very, very confusing. Yes. And we don't ever want someone to have a kid like wondering in the back of their head, was that like $20,000 down payment plus $4,000 in closing costs? Like how, understanding all of that. And it's, like I said, you think it's a super easy word to understand, because you just go to Google and say, what are my closing costs supposed to be on a purchase transaction, right? Yep. And then like every state has differences. Like we know Illinois buyer side title fees probably going to run somewhere in the $3,500 to $4,000 range. Yep. In Indiana, it's $1,400. Like there's
big difference.
Yeah, but if you divide out, 1,400 by 400,000 versus 4,000 by 400,000, your percentage of purchase price, that closing cost percentage shifts quite a bit. Yeah. So little things like that to just be aware of. Credit score, we beat that thing to death.
You gotta have credit, right?
You gotta have. There are situations that we can actually do loans without credit scores. They're not. I guess they're not the easiest. We do them. The biggest thing there is you gotta have rental history. But credit score is going to dictate quite a bit, from loan program to PMI cost to interest rate to cost for interest rate. There's a lot of things that credit score can do. And then there's a lot of variations of credit scores that create tons of confusion. You could go back to our Ozzy Osbourne episode about, who's the real Prince of Darkness, FICO or Ozzy. Claim situation, right? From the insurance perspective. Mm-hmm. That's when you have an event at your house, whatever, lightning strikes it, a tree goes through it, a fire, you file an insurance claim. Other C words, right? A contract, the thing you fill out. The biggest
thing in order to even get a home is you have to have a contract, right?
What else?
Signed by both parties.
What else? There's C words over on the real estate side of the fence.
Well, our favorite one, closing.
Ooh.
Closing. What is closing? Closing is the day, hopefully, for the most part, everybody's happy, right?
Yeah. You're usually signing on the bottom line or signing on the dotted line, and you're either depleting your bottom line by bringing money in, or you're the seller and you're getting money on your bottom line.
Getting money back, or you're buying your dream home, the seller's selling her home, getting their situation. And
yeah, I think we get a lot of questions about closing, like what leads up to it, right? So if you're a buyer, pretty common, you're going to follow up with the lender, you're going to get your final numbers from us normally. You're going to reach out to Nick. If Nick's your buyer's agent, you're going to schedule a final walkthrough more than likely. Typically with the night before or right before the closing, right?
Yeah, typically, you get your final walkthrough about 24. We like to do 24-hour a day before the closing in case there's any problems. You do a final walkthrough to make sure, there's no holes in the wall. The basement didn't flood, because as soon as you sign in that dotted line, Tony, you can't do anything.
The inks.
You can, but I mean, it's a battle.
Yeah. It's going to cost you money.
Yep.
Yeah. Once the ink's dry on that thing, it's yours.
Yep.
You break it, you buy it. So obviously C's, I'm trying to think what else. We got C's. Closing's the big one.
Closing's a big one.
That's the end. Should we just end the alphabet at C there?
I guess so. I think that's it.
What else is going on?
Well,
take us to school. Finish us up. Give us detention.
Yeah, let's run through the market and how it's going right now. It's starting. It's transitioning. Has been a little bit more into a buyer's market. So if you've been looking to buy and you thought it was too crazy the time before, now is the time for you to probably dip your toe in the water and see what's out there. A lot more negotiating back and forth is going on as far as closing costs. If hey, I don't got money for closing costs. Well, we're seeing a lot more sellers put more money towards closing costs for buyers. I can't guarantee that's going to happen every single time, but we're seeing that a lot more, which help people on their bottom line that they only have a down payment, or if they don't have a down payment. They've got a client right now that's doing a USDA and they're looking to get all their closing costs covered. They're probably going to come to the closing table bringing less than $1,000, and if that, maybe zero.
I think it's on the topic of C and closing cost, right? Like, and how that all gets navigated as part of the contract, right? Like, if you are dollars into the transaction sensitive, reducing price does not fix the dollars into the transaction. closing cost credit is going to have a much more
Amen.
tangible thing, right? Because if you're putting 5% down on a $200,000 price, right? So it's what, 10 grand.
Mm-hmm.
So now you put 5% down on a $195,000 price. Like now you're multiplying that. It's a $250 reduction.
Yeah.
So going to 200 and then asking for $5,000 in closing costs, likely going to reduce your dollars into the deal by $5,000.
Yeah.
That's like, so if you're that sensitive about it, but that closing cost credit, there's always this misconception, or like, it doesn't come out of thin air. It comes from the seller.
Yeah.
Now there's also situations, and we've deployed this strategy, and it's becoming more and more as the mortgage rate market stabilizes. There's situations where we can trade up on a rate. So take a slightly higher interest rate and give you a lender credit too. It was when we're going through like a lot of technical problems in the mortgage world and secondary market stuff, like it wasn't nearly as available, but it's as that market starts to stabilize, that's coming back too. I actually worked with someone, a guy the other day, worked through everything and said, hey, like we could actually trade up 0.25% interest rate and we can give you $850 off on closing costs.
Roughly, how much does that affect the payment? Because that's the first question everybody's going to ask.
It's going to kind of loan amount, but like 0.25%, like you're $35-$40 sometimes. Like
what the heck?
Yeah,
trade 30.
Well, it was a difference between him having enough money to get the deal done or not. And like, there's nothing wrong with. We talk about budgeting, we talk about finance, we talk about all of this stuff. There's nothing wrong with coming to professionals and just asking them for help and asking for a plan.
Yeah. I mean, we want to help you guys. I mean, say we want to be, we're out here. We want to be someone that you guys can trust, because you can't trust everybody. We understand that. You can't trust people that you just call on a computer screen that you never met before. You know what I mean? There's ways to get things done. There's ways to do legitimate business and making things happen. And that's what we're trying to provide you guys, and going off that, kind of what I tell people on the realtor side of, just put, you got a $250,000 home, right? But they want the buyers need or want the sellers to cover all the closing costs. Well, maybe they want to go real low and ask for the closing costs. Well, maybe you don't do that. You know what I mean? Maybe you go $10,000 higher, ask for $10,000 in closing cost credit. They're like, well, then I'm paying more for the house. Well, you're paying $10,000 more for the house, which probably affects your payment, what, $50 roughly?
Yeah, 10,000 is about so we usually say $5,000 is about $35 a month.
$35 a month.
Yeah. So 70 at the maximum 70.
And, if you refinance, if that's $70 is a big thing, but do you really want to lose that house over $70 a month in two, okay, what the $10,000 difference? Well, you're paying that in a 30-year period. You're paying that off in a 30-year period, right? So that $10,000 you're paying off in a 30-year period might be better for you to have $10,000 in your pocket right at that point in time, rather than.
Yeah. I mean, let me challenge you with the other side of it is $5,000 on your credit card is going to cost you $94 a month.
There you go.
So $5,000 of like price and a credit, if that's only going to cost you $70 a month, you're ahead there.
Yeah.
There's keeping the price in perspective exists in regular existing real estate sales. It's also, if it wasn't the pinnacle of real estate transactions, you wouldn't go to new construction and see all of these incentives for, below market interest rates.
Yep.
But you have to take this price and you have to take all these options. And it's because the price is the dictator of all of the rest of the math.
Amen. Yep.
So that's, again, when we talk about things, like you obviously represent sellers. A seller, right? You're presenting an offer. They care about what the net sales price is and the percentage of that closing, right?
That's it.
So the net sales price is, for the seller, it goes their sales price minus their cost,
minus their closing cost,
minus a closing cost credit.
Yep. Minus anything they'd had to put in the deal to get it done.
So there you go. Like that money doesn't come out of thin air.
No.
But it could have that $5,000 or $8,000 could have a substantial impact on on the buyer. Whereas it may, like I said, it's just sometimes it's a drop in the bucket to the seller to get the deal done. Yep. But don't maybe haggle. Again, we can't encourage people to not offer how. Don't understand that when you're buying the house, you're looking at it in one light, and the seller's looking at a different light.
Yep.
Maybe try to like put the shoe on the other foot for a minute, and
it's a meeting of minds, meeting in the middle.
Take a peek over from the kindergarten class and see what it looks like in first grade.
Yeah. I think the hard part is getting people get out of your head, take the emotion out of it. It's a tough thing, right? Residential real estate is an emotional business for clients. There's commercial. It's not that where it's just business and they got bottom lines. If you could take that out and separate that, we're not saying that the seller has to totally understand the buyer side and vice versa. Maybe meeting in the middle. If you really want that house, there's ways we can get it done and get the best deal for you without trying to kill the other
best
side.
deal. You said it for you.
Yes.
Not the best deal.
And to get you that place. Don't pass up on a house over $10,000.
Everybody's best deal is different. And I think that's like the biggest thing. Amen. Is there's no such thing. The best deal for you might not be the best deal for me.
Right.
That's again, but we have to, if everyone can just get into lockstep on there and then we're good to go. What else we got? Anything else we need to hit?
That's it. That's the market in a nutshell. I mean, what are we looking at rate wise? You got anything on that for us, or am I hitting you with that?
We're trending in a positive direction for interest rates. We got some really mixed data on today's Wednesday. So yesterday we got some very mixed data. It's actually like very strange that the market reacted the way that it did. We had some inflation up, other inflation down. Like what I think Wall Street's starting to determine or come to realization of is it's in the data that we're receiving or that they're receiving and making trades on is maybe not the best data, or the source of it might not be the most accurate. So there's some volatility. But like I said, we're starting to see some metrics come back. We're starting to see, again, it'll have not a direct impact on mortgage rates, but we're starting to see the Fed funds futures, which would be the bets or the positions, if you will, for a Federal Reserve rate cut of the Fed funds rate in September. Those are picking back up again a little bit. There was a lot of noise and a lot of stuff in the media about that.
Yep.
So we're moving in the right direction. I think we're starting to see some normalization. Every time we talk about it, it's a little bit wild. And I think we'll maybe close it with this on a math lesson.
Okay.
I don't know, it was a month ago, maybe you and I were talking on a Friday and you were kind of asking me about like, how come we only see incremental changes in the stock market, but then like we talk and then we see like a monumental shift in mortgage rates. So like mortgage rates are primarily driven by the fixed income situation of the bond market. The bond market is almost infinite in size. So like when you have the stock market, right, there's only so many stocks that are on the S&P list, so many that are in the calculation for the Dow. And then there's only so many that are just listed to be traded. But the bond market is everything. Like you have insurance companies, mortgage companies, any type of other fixed income, annuities, all of that stuff exists there.
Yep.
And then that's where all like credit risk is offloaded and put on. So it's when you start to hear like, like what looks like a pretty big shift in stocks and equities and stuff, understand the bond market's 10 times, 100 times the size of that.
That makes sense.
And that's why we talk about volatility. Like it's that it bleeds that much more sensitive into mortgage rates. Inflation, again, it's the oil to interest rates water. But there you go. There's your math lesson.
All right. Well, hot seat then real quick. Are we looking to, can I do that to you?
Yeah.
Can I do your own show? Are we trending down, you think? August, September?
Yeah, we're starting to see a strong drift that direction.
That's good.
We are also, though, I will indicate this part, we are right now, for those of you guys that want to get really nerdy from a technical analysis standpoint, we are trading way above technicals. So there is the situation where things could start to flip. Again, we're always one tweet or one post or one data point away from the market flipping the other direction, because we just don't like, the biggest concern is what is the real impact of tariffs on inflation. But the other side of it, right? Like that we only hear that tariffs are bad or horrible for inflation. We don't hear the other side of it, which is they also are generating a massive amount of revenue for the federal government that allows the government to slow its borrowing. So when they're not, the Fed's not issuing nearly as much treasury debt, that also brings inflation down. So it's a weird balance, but we'll see where it all shakes up. I mean, I think that if we go back like delete like weird timings, maybe go from like 2012 to 2020, rates when they're in the 5.75 to 6.25 range on a 30-year fix, like the market's normal at that point.
Okay.
You're trading out, like you could lump in debt and it makes sense. You could trade up on a house, trade down on a house, and that you're not having as much sticker shock.
So we've been in that 6.5 to 7 range. You'd say the past year.
Yeah, we keep like it's weird. Like it bounces really high and then drops, then bounces. Like it's.
So
but it's been a pretty tight band.
So we could stick in that 6.5 and go down, not back up. We should start seeing some good things in the market.
Definitely.
Yeah.
I mean, it's again, you're trading up. If you're trading from a 3 to a 6, it's not so like, I know it sounds horrible, but it's way different than trading from a 3 to a 7.5.
Yeah. Absolutely. Yeah.
And we're starting to see too, and this will be interesting. Again, more people with technical stuff on the hot seat, but we're starting to see a lot of information about real wage growth going on. And that's been one of the bigger issues about affordability, is that normally you have median income times 3 equals median home price. And lately it's been median income times 7 is the median home price. Mm-hmm. So that's, I think, when wages come up too, that will help. But what that means though, prices likely got to trickle up again, or drift up there. So getting in now, so the amortization period starts. Getting
in now while you can, get your best deal, refinance later,
and just have a plan. That's the biggest piece.
Yeah.
Those teachers they gotta have their lesson plans. We'll get you a mortgage lesson plan or a buy and a sell lesson plan, right?
Yep, absolutely. Tony Perri is one of the smartest people I know. Knows that stuff. He's a wealth of knowledge when it comes to that. So that's good stuff.
Kindergarten graduate.
Yeah, he didn't have iPads back then.
We did not. 207U, where
cursive, and you guys had
where your real estate tax dollars are going. That funded my public school education there over there at Piatone, 207U.
Piatone, shout out to Piatone.
Yeah, well, shout out Beecher. You were giving. Obviously, you guys had that big giveaway there, helping out the community with some
with the Lions Club, did some stuff. Your team was a part of that. We appreciate that. We had a couple other vendors, Burkhart Better Homes and Gino Finello, a Beecher guy in Burkhart and Piatone guy and
Gino grew up right down the street from me.
Right there you go. So we had we did a back to school thing with the Lions Club, a great thing. They had a little farmers market going on, and they're very appreciative of that. So good stuff.
That's what it's at. School's back in session.
Yep.
Drive safe. As now a dad who's got a kid walking to and from school, I'm a little more sensitive to it. Mm-hmm. I also love to drive fast, but drive safe.
You were that one there, they were telling you to drive safe.
Yeah.
Because their kid was walking to school.
Exactly. So keep an eye out for that. If you decide that you want to line things up for a fall move, a winter move, even being ready for the spring market, like it's already August.
Yeah.
We're gonna be in the back quarter of the year here in no time.
Yep.
So putting that plan together so that when spring comes or whenever else comes here, it's ready to go.
That's the best.
How do they get with you?
You can all our social media is Realtor Nick Oosting. Call me 630-284-9624. You can Google Nick Oosting. Very easy to find.
All right. Applywithjr.com. Class out of session. Detention starts now.
I'm done. Cut the show.